balance sheets are, okay, I take a film camera, right? Film camera, I take a snapshot. That will never, ever, ever, ever be the same snapshot as when I took that snapshot. It was a moment in time. That's the way we look at a balance sheet. Income statement says, well, okay, this is, it changes on a daily basis. Like, well, we get a bill in from us, like, where'd that bill come from, right? It's like we didn't even know that we were gonna have to pay that, right? So, but sources and uses statement breaks it down and say, okay, long-term assets, and that's usually typically the textbook definition is more than a year, short-term is less than a year. And then if you talk to some people, there's intermediate assets in there, 1 to 3, 1 to 5, whatever. And you want to just make that note. But land, buildings, and those types of things, generally with you people, because it's you're not talking like thousands of acres. You're talking maybe about thousands of square feet, right? It's like, well, what's that worth? Well, I tend to discount a lot of times the land as not worth a whole lot, right? Because you're dealing with such small amounts. Now, if we're talking like a farm, well, that's not a bad deal, right? We're talking about so much per acre, whether it's out west, we're paying $500 an acre, or if it's in Brookings or Aurora County down there, it's $12,000 or $14,000 an acre, makes quite a bit of difference. Or if we're maybe near a municipality, we may be talking about square foot, $10 a square foot, right? It's like, $10 a square foot, 43,560 square feet per acre, times 10. Oh, well, what's that land? That becomes a big issue, right? Anyway, so it talks about what are you going to need for your business, and where's that money going to come from? Okay, are you going to get a loan? Are you going to get a grant? You're going to break the piggy bank of one? Are you expecting inheritance? You already have the inheritance, whatever it might be. So all those things on that. And whether you are going to the bank, getting a grant, self-funding, whatever, that's where that comes from, right? Because most people, especially the people that are here, are saying, well, it's going to cost us money to do so. We have to have equipment or materials or seeds or livestock or whatever to do that. This next one here, worksheets. Worksheets are good to do with pencil, or do them on a computer. I will share the Word version of the business plan, the sources and uses guide, and this income statement with you as well too. So you can, if you're so inclined, you can either print them out, do this on paper, or you can put them on your computer. If you have Word, if you succumb to buying or renting Word or paying for Word, you can just drop your cursor in there and put those numbers in there, and it'll total them. You can do all that. It makes it look pretty, and especially if you're taking it to your spouse or your partner or your banker or grant application, right? So I wanted to show you those two things. That's almost the end of that business planning guide that you have, that you had in front of you. A lot of it is just, after that is just acknowledgements and so on. Thank you very much. Appreciate that. So, number 1 page of my spreadsheet, 43 pages of spreadsheet, this is the one I was talking about earlier, will be sources and uses. Like, I don't know what you're planning on. It's like, is this going to be this going to be a big rock and roll deal here, and it's all fixed cost, or is it going to be grow it very organically, and you don't even need money. You're just trying to figure out how much it's gonna take here to make this all work. And some would say, well, that's a little, that's a little overkill. If I'm only gonna $5,000 business, and, 3 years, it's gonna be a $10,000 business. It's like, okay. So, but this first tab here, and you can see these that are in blue, those I can enter, right? If they're in black, they come from someplace else in the spreadsheet program. Okay. And since this is I liken this to a pro forma balance sheet, the assets that we have need to equal where the money comes from, right? Assets equals liabilities and owner's equity, right? So what we're gonna own has to equal where we got the money from, whether it's a liability, whether we borrowed it or we took it from whatever, took our equity or we contributed equity. And there's places for both of those. And they need to equal, right? So I will also say is that that this is proprietary. I can give you this worksheet, but it's going to expire in a year. And I will guarantee you that in the first time you use it, you're going to screw up some formula. Because like I said, this is all integral. You're going to screw up some formula. It's like, what happened here? Can you help me fix this? Because I still do it after how many years? And I call my boss, and he owns the worksheet, and he says, well, you need to do this and this. I'm like, remember? It's like, well, okay, yeah. Okay. Critical assumptions. Critical assumptions are those things that we talk about, right? It's kind of like the abridged or the preface to your business plan, right? Who owns the business? The LLC. Jennifer owns 51% of the business or whatever, you can, if you're really good at this and you can really smith this good, you can say that Jennifer owns 51% of this limited liability company that is formed as a partnership, right? It's all to be one line. Those critical assumptions are things that we put together. So now, critical assumptions, usually it's like after I do after I do an interview with you, I can write those critical assumptions because it's what the bank is going to want to know. It's what you're going to want to know. Like, well, who's going to do the work here? Oh, I'm expecting my spouse to do the work. Good thing you told them, right? Or where's the money coming? Well, I thought we were going to use that money to redo the kitchen. And you're going to say, no, we're going to buy a tractor and a cultivator, and we're going to try to raise squash and pumpkins and Jerusalem artichokes. Jerusalem artichokes, right? So usually I can do 10 or 15 lines of this, and I talk about kind of the general assumptions or the kind of the preface, the abridged, unabridged, abridged version, the shortened version of your business plan, or how you plan on running the business. This one here, this is the key one that we're talking about. goes back to the business plan. The business plan wants to get here to tell you, to tell your banker, to tell your grant reviewer, or whoever, how much money you're planning on earning, right? And you can see here, you can see way over here, there are, what, 7 lines? We have profit centers. Okay, they use the word profit centers. I use as enterprises because that's the way I learned it, right? So profit centers could be, well, you're going to sell fresh tomatoes. You're going to sell salsa. You're going to deliver tomatoes wholesale, right? So wholesale. So each one of those has, you can put a line on it, right? And now we can build that a number of different ways. This program will automatically calculate those 4 ways. You can just enter in hard numbers here that you see that they're all blue here. They're not for the second year because they go off the first year, but we can put a percentage in here. It's like, well, we expect 40% of our sales to be retail tomatoes, right? At the farmer's market. Oh, okay. So that's where our revenue is going to come from. And this is what we expect. It's going to be from July till September, right? Or October, right? That when you can grow fresh tomatoes, October, yeah, maybe. Okay. So, but then salsa, we're going to sell that year round. And maybe the high point of that's going to be in October, November, right before Christmas as gifts. But guess what? Maybe we have a real uptick in April, May when everybody wants salsa and it's starting to get hot out. And we're eating salsa, or maybe it's July when we're going out and vote. I don't know. Anyway, so we have different ways. I want you to start thinking, it's like how much revenue and where that revenue is going to come from. How much revenue, where's revenue going to come from? Is it going to be just a simple one deal? Like Michelle is probably thinking, okay, it's like, well, I have a bed and breakfast and I have sales and I have, you know, does anybody here do a CSA, community supported agriculture? You know, different types of programs like that. How do I get my revenues and what do they look like? Is that going to be a big part of my business? I don't know. Is selling fresh tomatoes, is that a big part of your business? If you have high tunnels, I would expect that everything from the high tunnels, it's going to make May, maybe. I don't know if you can get tomatoes in May, maybe with hydroponics, maybe they're going to have hydroponic tomatoes in April or May, maybe, I don't know, all the way through November or December. You know, I don't know, January tomatoes. I've heard that tomatoes don't grow real well when the sun doesn't shine, right?
Well, I know Mark's goals, or that greenhouse is empty a couple months.
Yeah, yeah. And because they were the ones that told me, they said, tomatoes are pretty dependent upon the sun to ripen. And the tomatoes might grow, but guess what? They don't ripen. And you can spend a lot of money heating the greenhouse to keep them alive. And they'll grow, but they won't ripen. Okay. So well, and that's maybe the way you do it. It's like, well, I take all my extra tomatoes when tomatoes are selling for $1.25 a pound. I take all my extra tomatoes and I make salsa. Right? Keep one. I always put this in here, I just leave it in here. This is one usually where I say, okay, how are you gonna make money? This is where I've talked about sensitivity spreadsheets. This is where I put a sheet in here, and I can connect that to the rest of the pages throughout here as well too. So if somebody wants to volunteer their information. But it comes down to the page like we just saw here. Except for guess what? This is very detailed, but the categories pretty much line up, right? And we have revenue up here. Here's a new one that we have, cost of goods sold, right? We haven't even talked about cost of goods sold, but we have we cut off some of this here. Owner salary. How much time are you putting in this and what's the time worth, right? Are you worth $15 an hour? Are you worth $50 an hour, right? Are you a practicing lawyer? And it's like, well, I could be practicing and earning $150 an hour, or I could be out there in my greenhouse growing tomatoes. I will make people, when I do financial statements, I will make people put in numbers here in this deal because the bank likes to see that. And I will ask every one of you right now a very poignant question. I think this is probably key for the day. It's like, if you're not going to pay yourself, or if you're not going to make money, why are you doing it? And I mean that very seriously. Why are you doing this? I mean, you can have hobbies. I ski, I golf terribly. I do a lot of other things that cost me money. And it's like, I don't expect any results back from it. But if I'm running a business, which was what we're talking about here, a business plan, what's my ability to make money off that? And some point at time, have I covered all my expenses, including my own labor and the taxes that we'll pay for that? So owner's salary up here and the 15.3% self-employment tax, I usually put in there. And they say, well, I'm not going to pay myself, or if I run a little short, I'm not going to pay myself. That's great. This is a projection, right? Fixed employee wages. As we go down here, we're variable employee wages. You're going to hire somebody during the peak season, somebody to help you make salsa, somebody to help scoop out the tank after you've made wine. That's always fun, right? And then all these other little expenses, big expenses. You know, it's amazing how many people don't understand when you go into business, you can take a lot of your expenses, a lot of your what you normally consider personal expenses off, or business expenses, your telephone, maybe a portion, you know, the IRS has rules about that, but maybe a portion of your house, if you have an office, right, a dedicated office, you know, maybe part of your land, rent, you know, did you buy 5 acres out here in the country? Is there a portion of that is your residence? Yeah. Well, you live there. Do you live there because of your deal? Well, you have to live somewhere, but maybe a portion of that is helps make your payment.
Can you put on that one, like, let's say you bought the land, and then if you build on there where you rent from the land, from the business, like your home part is rented, or vice versa?
You could do that. Yep. Yeah, or vice versa. And that might be, you know, it goes back to the conversation that we had earlier about LLCs, right? And having separate entities, right? So one entity might own all the land and the buildings. And then the operating entity
owns or pays rent to this other entity, right? And never the two shall mix. That's critical, right? That's critical. And that we can, I do these, a lot of the times, I don't know if my colleagues do it or not, but many times I do two sets of these projections for people. One is for the holding company or the part that the entity that owns all the property, the land, the buildings, all that kind of stuff. And then another one for the operating entity, restaurants and, you know, all those. It's like, they're two different entities. One is renting buildings, and the other one is making chicken salad, right? So. One of the big things, just as a deal since we're right here, credit card fees. How many of you have have credit card accounts and charge your people credit cards, right? I consider 2.5% here. And I say either 2.5% on credit card fees, and they might be more than that, might be less than that, or maybe 2% on credit card fees and 0.5% on bad debts. Right? If you're still taking checks, it's like it only takes one check, and the time it takes you to get recover that check, what's that worth, right? And everybody goes like credit card fees, and it's like 2.5% of my gross, and it's a huge number. If you're talking, it's like $2,500 on $100,000 worth of sales, and you're going like, holy crap, I didn't realize it. But I would say a credit card fee is generally, this is debatable, right? A credit card fee is better than maybe taking a bad check and then having to, you know, well, maybe that's not who you are, right?
But also years ago, when we had our bistro, we found that at first we didn't have a credit card and people don't carry cash. So we've lost sales.
Yes.
And so by adding the credit card, we felt we made up that difference.
Yeah.
Even if there was a fee.
And I will tell you that I used to be an advocate for farmers markets across South Dakota, right? In South Dakota, I was the person. So it's like farmers markets. When we first started, we had maybe 5 or 6 farmers markets throughout the state. Now we have 50 or 60, I think, right?
Really?
Last I counted was like some of
Chamberlain doesn't have theirs.
they used to have one. Yeah, they used to have one.
I think that year we got hailed so bad.
It'll take them out. You go out to the one out in Rapid City, Sioux Falls, some of the other bigger cities, they thrive. I love them in Rapid City. I go there all the time. And
And that's open all year, isn't it?
I think they're closed down, maybe
Yeah.
Michelle or Pardon me?
They do year round now, but I think a lot of the winter is
Yeah, they're pretty much
More like-
closed up now.
Right.
wholesale.
wholesale. They have like the meats, the frozen stuff, right? Like, yeah, we have this sitting out here on the back of the pickup, right? It's frozen.
Outside.
So. But with farmers markets, I said, if I come to the farmers markets and I have so much cash in my back pocket, I'm gonna spend it until it's like, oh, I only had $15. It's like, first vendor, I'm wiped out. I'm done. If I have a credit card or you have a Square on your phone or whatever, I keep on shopping. I buy lamb and I buy mushrooms and I buy we grew some artichokes. You know, maybe, crafts or whatever. I hate to say it, every time I go to the farmer's market in Rapid City, I probably spend no less than $100. And I rarely ever carry $100.
Now he's throwing money around.
Yeah, I wish. So I think it covers those sales winery. Yeah, it's like, well, I planned on going here to buy a bottle of wine. And I walk out with a case and some merch and some,
See,
Yeah.
that's what you gotta
It was
put
the
first.
samples made me do it.
the samples made me do it, right?
You put a third cash, a third credit card, and a third check, and your wife will never figure out how much you spent.
Yeah.
That's what I tell people, I sell stuff, do a third cash, third check, and third on credit card, and your husband will never figure it out.
So who here goes to a barber shop or a hairstylist, right? And my hairstylist she wouldn't take credit cards. And I said, you're losing sales. I said, you have all this retail product up here on these shelves. And I said, it's like, they're not gonna buy a $40 bottle of color conditioner or whatever, because they can't put it on their credit card. And I said, so years later, still cutting my hair. She has a credit card machine and uses it. It's like, oh, okay, I can buy this and I can buy that.
I will press your silly button for a tip.
Yeah. So it depends on what there's a lot of people that cash is king, right? Or checks are king, but checks, I ordered checks the other day, for my bank account. $1 a piece for the check. They're not free like they used to be. $1 a piece just for the blank check to print it out. $80 for 80 checks.
You need to bank somewhere else.
Well, there's this place called the internet where you can buy them.
Yeah. And I should have, right?
And just a thought on non-cash payments, STSBA is actually doing a webinar series right now about accepting different types of like cards, and processing those. Tomorrow is actually our first one and I'm talking to Michelle, so, if that's something that you're interested in, you can find the links in the, newsletter that they sent
Sure.
out.
Then things like Venmo, you have bed and breakfast,
Cash App.
VRBO, what are those? But a lot of times they charge pretty heavy fees, 10%. It's like, oh, wow, that's a lot. And they're paying all the taxes and they're doing this stuff, or supposedly they are, until they're not. And then guess whose fault it was that you didn't pay your taxes? It's not their fault, it's still yours, right?
I
So-
have, this is an odd question.
Sure.
Do you have like all of our email addresses?
Yeah,
Would everybody want that, everyone's link to be able to connect? Can we get a copy of everybody's?
yeah, if everyone's okay with that, I can send you all of them. I'm planning to, after this, send an email with the Word version of the documents, and another link to the Google Drive, and maybe I'll include like a contact sheet on there.
And is everybody okay with that?
Maybe I'll have a paper and you can sign off on the email
Yeah.
you'd like.
I'm just thinking if we don't have time to connect afterwards, I would like a lot of services.
Maybe on the way out, I'll have a paper, and if you're interested in.
Do we have like a notebook? I do.
Yeah, I like the
Um,
contact sheet.
And
idea.
then you can just write down the email that you would prefer, if you want to be contacted, and then I'll put those.
If you want to put your stuff down here, name, and email address. Maybe the town you're
I
from.
didn't want to change subject.
No, you're
but I
fine.
just don't want to miss one.
That's why we're here.
The one we haven't probably talked about, sometimes it's really easy for me to deal with before we get on to the next portion here. Because we're already way late, right? Cost of goods sold.
Cost of what?
Cost of goods sold. I typically relate this to people that are, I relate to everybody and I say, well, most time farmers and ranchers, cost of goods sold, they, if you talk to an accountant, they go like, what's the cost of goods sold for a farmer and rancher? Because we take little things and we make more and, so what's the cost of goods sold? And they used to have a big problem with that at the start of COVID. That was like, cost of goods sold, you had to report cost of goods sold. Well, how could you do that if you didn't have an idea what cost of goods sold? Most of the retail businesses know what your cost of goods sold is, or have your accountant may know what that is, or may even report that on your tax forms, right? So cost of goods sold, I say, and it can, the reason why I think it's probably difficult, because when I look up for the definition of it, I see all sorts of things, right? I see, well, it's the cost of the product, right? Okay, the cost of the product. Well, then the sales expense, and does that include the fixtures in your retail shop, and your salesman, or your salesperson or whatever, who's there on Saturdays to do this when you're not there, whatever. What I like to do is like cost of goods sold. If there's something that's fairly consistent there, restaurants are a good example. Well, let's go back. I say cost of goods sold is like, okay, you have a clothing boutique downtown here, and your clothing is your cost of goods sold. So you buy a shirt, blouse, dress, whatever, for $10, and you sell it for $30. $10 is your cost of goods sold. Now, a lot of accountants will say, no, that's not right, because you can include all sorts of other things in cost of goods sold. I do that up here in the, up above where we came from. I do that so that you can say, my cost of goods sold is my shirt or whatever. And a lot of times cost of goods sold, restaurants, as I was going to talk about, and maybe applicable to you, restaurants, it's like food costs. 32% food cost. Okay, that's a good number to put in there for cost of goods sold. It's like I bring in steaks and chicken and lettuce and hamburger buns and all this kind of stuff, and I add value to it. I cook it, I process it, I serve it, whatever. My cost of goods sold is 32%, or maybe it's 38 or 54%. Who knows, right? I used to work in a restaurant that was barely ever under 50%. Right? We're under price, right? We talked about that with a few of you. Cost of goods sold, so we can say, 30% here, and we can vary that for every enterprise. Maybe some enterprise, like, I don't have any cost of goods sold for my fresh tomatoes, but for my salsa, yeah, I bought tomatoes from the farm. I paid $1 a pound for them, which is the market price, right? I could buy tomatoes and make them into salsa for $1 a pound. And so every quart of salsa I make, the cost of goods sold is 28% or whatever.
You're still gonna have a cost of goods sold for your tomatoes too, your seed costs and
You could,
your.
but I typically break that down and accountants will vary on this in terms of their opinion as well too. I do it so that I can make sure that everybody is included, the important elements of what their expenses are, right? So we, because a lot of times I'll get, income statement that will have their revenues, their cost of goods sold, and maybe 4 or 5 other items. Like, what was the cost of goods sold? Was this? And for you as a business, you want to know, it's like, how much of this was my utilities? What were my utilities? Was my rent really high, or did my utilities go, were they twice what I expected them to be? So that's why I tend to like these itemized deals like we have down here. And most time businesses won't break this down, like the staffing cost, labor cost. Most businesses don't do that. Like, owner salary, your taxes, your fixed employee wages or your variable employee wages, they don't break that down. You know, lucky they may have wages, right? And then taxes are all rolled down in here into property taxes, and all that. It's like, okay, so was this accurate? You know, what are my property taxes doing as a percentage of my sales? Did my property taxes go up by 30%, but my sales didn't increase at all? Yeah, or what happens if, you know, if I'm watching this stuff?
I know a class that I was just in, a gentleman, the farmer, he came and he talked about how he finds his cost and then how he marks up his product. And he literally goes through every single, like, if he does tomatoes, if he does peppers, if he does carrots, if he does pig, if he does whatever it is. And he literally puts his labor costs down, his feed costs, everything to come out with that end price, how much he paid himself.
Yep.
And so, yeah,
When I
all of it, on every product.
When I first graduated college, I thought I was going to set the world on fire, and I had a big accounting system that would allow me to do enterprise analysis, and I had enterprise, and I was going to figure out how many hours I used the tractor for this enterprise, and how many hours I used the tractor for on this enterprise, and how much the pickup was, and how much gas each one burned. I thought I was going to do all of that. It's like, in practice, it's much harder than we think, right? So when we take this to a tax accountant or a tax preparer, and we do a Schedule C, you know, which may be how you do it, or if you're a corporation or whatever, you do some other schedule. You know, there's a cost of goods sold, however you do that. You can break it down. You know, it's whatever. Supplies, I like it when people are constantly telling me, it's like, I can't believe how much my supplies, how much I put down. It's usually a catch-all supply. Oh, yeah, I don't know where that is. It's like Scotch tape or Staples, or, you know, I have a meat processing plant, so it's plastic booties, not the kind that I wear, but the kind that my guests wear. Oh, okay, they're a different, oh, okay. So, and there are some rules about that, especially when it comes to certain industries, restaurants in particular, because certain restaurants are so plentiful. But what you include in what category? Absolutely. I always encourage people to, and I will tell you about this too. I will encourage people to hire an accountant. Minimally. I'm already asking you to do something. Most of you are producers. You know, you're great at producing things. You know, you like to, who was it that said that when they wanted to die in the garden, right? Michelle, right? If I die in the garden, I'll be happy, right? So you like producing. You don't like doing the book work, and you sure the hell, pardon my French, you sure the hell don't like on the 5th day, that check better be at Department of Revenue for that sales tax, right? Otherwise, they do that about twice, and then they come knocking at your door and they'll say, where's our money, right? They say, go ahead.
So what do you think of the QuickBooks and all that for accountants?
I really like QuickBooks. And
Or if you have another recommendation for,
I think any of them, I think QuickBooks is widely utilized, widely understood, and it's the language a lot of times that accountants will do. It's like, if you take your QuickBooks accounting and that's great for you. Sometimes though that the accountant might say, well, okay, well, we had all these receipts or all these expenses once a quarter. Here's how much tax you pay, and I'll tell you how much tax, and you don't have to give them control of any of your bank accounts or anything like that. Might cost you $150 a month. Somebody will say, oh, $150 a month. It's like, well, that's a lot of money, right? You know, it might cost you $600 a month, right? If you're having to do a lot of stuff. But if you really like gardening, if you really like taking care of chasing animals or whatever it might be, you know, a lot of times those accounting functions are really superfluous to what you really like to do. You know, it's like, I don't want to sit in here and type in check, which I used to do. I used to have 150 checks every month, and I used to put them in a accounting system. It was pre QuickBooks, right? Pre Quicken, actually, which what I still use, right? Now it's like, there we go. It downloads everything from the bank and all this stuff, and I have to go through in here and take care of a little bit of stuff. But I can just send it to my. Go ahead.
I was just saying, you're encouraging us to consider the opportunity cost, is that what you're?
Yeah. Well, opportunity cost and the fact that people don't like doing this. And it's like, boy, the first couple times you get a nasty gram from the Department of Revenue or IRS that says you need to pay your taxes. And you say, oh, okay, I'll do that. I'm really busy taking care of selling tomatoes or whatever. You know,
I
we-
could teach a class. After the audit we had, I
Yeah.
could, and I'll tell you what. It was a deal that Tim's dad had passed away, so millions of dollars of assets with the farm, 3 businesses, hundreds of thousands of dollars of transactions. This is what they got me on. This is what we pled guilty to. On a tool chest for $1,000, which is not a problem. That's a farm deduct. We're not gonna say who, because we don't know who, but somebody put 2 Tootsie Rolls on the bill.
Oh,
45 cents. Total, 2 items for like 45 cents. Was what, 17 cents? Then you have to hire a CPA and how many hundreds of dollars an hour to defend you.
They throw the whole receipt away when they see that.
Yeah, so. Yeah, and but I mean, the audit we went through was what they call like a,
Compliance.
well, it was a research project.
right.
And
Research.
yeah, that's what. And the first thing they ask you, where's your personal receipts? Because they're looking for income that you didn't claim. So they want all your personal receipts, you know, where's your airline tickets, where's your vacation, all this stuff. And where did you get the money for all that? You know, and that would really surprise me that the first thing they say is, well, where's all your personal? Well, I throw that away. You know, because you think, well, I'm not deducting all that, so why do I have to keep all my personal? Well, obviously, if you don't have a receipt for stamps that you bought personal, you stole them from the business. That's just automatic.
Wow.
What?
And, you know, it's just,
Was that with an LLC or without?
we had both.
Well, I will tell you too.
So they crossed over into your personal.
Well, we filed jointly and she had a business, I have a business, and it just looks like, well, then they can open all of your businesses up. And
Yeah,
it's,
you file one 1040, right?
yeah, and it's,
Two or three
it's all
schedules,
fine. It just,
right.
it was a research project and they sent a gal from Rapid for 2 days.
And I
I've
mean,
never met an agent in all my 50 years.
you know, and it's, we have a house in town and we have a house at the farm, you know, and I don't deduct anything in town. I'm like, well, here's my personal stuff. This is electric bill from the house in town. This is a telephone bill. This is, even though I had another home party business, I never deducted anything in town. I just didn't. And she still's like, well, we gotta go through your house because we're just sure your house in town is filled full of money. It's like, okay, well, you know, she goes to our house at the farm and it's like a 1970s orange flowered couch and 1970s shag carpeting. And it's like,
It just, they're able to do whatever.
I mean,
they
yeah,
want to
they
do.
can do whatever they want. I mean, it's,
Keeping ahead of the government agencies, including the IRS in particular. Audits, you know, we always hear about audits being really terrible. It's those other things, and my parents had a deal. The CPA actually came along with them. They spent about 2 days and they went through boxes of receipts and stuff like that. And I just saw the other day, they said typically most people are due refunds after an IRS investigation.
Not the guy we had.
We,
I followed it online
our
and he
accounting,
went after
accounting
mountain.
firm, we provided a table full of binders with everything in it. And the accountant firm in his office. And his 2 days, of, a lot of work, it was $3,500 from the accountant was the bill
Oh,
for his help.
Just remember, when you're making your taxes every April 15th or whenever you do it, that you're still responsible for every period dot of ink and everything that's on there. Is the accountants will typically say, we just prepare the taxes based on what you told us, right? If they're full charge bookkeepers, oh, well, that's a little bit different because, they're supposed to know all that stuff and they're supposed to know, it's like you're supposed to depreciate a vehicle for 7 years or 5 years or whatever it is. Sorry, I'm not an accountant or not a tax preparer. But with all those, you're still responsible. You're the one that's signing your name at
Yeah.
the bottom of that tax return.
And the
Yeah.
checks, blank checks and billing statements meant nothing.
Yeah.
She shoved them to the side, only invoices,
Invoices.
period. Only the invoices,
we had to
be
provide every
generated.
receipt.
all of the,
And it's
And
like,
I had to pay, I had to provide them copies of the receipt, like, for example, my postage receipts were probably 800 pages alone. And I had to, that was like one item. I mean, when I got my stuff back, it was like, the back of my little Mazda was like level with papers and a lot of stuff they asked us. And I had to pay for the copies of all, and
it was deductible next year though.
yeah, well, and thankfully, we have Endorf, Lurken and Olson, and they were very, very good to us, and they just said, just give us your stuff, and they have a machine, and I mean, like Tim said, it was 3,000 or something. If they'd have sent me a bill for 20,000, I would have paid it, because they had so much time invested. I mean, Dave, every morning I text Dave, this is what I'm doing. So I got done at noon. I mean, that was kind of audit we had. So if you ever get an audit like that and you have somebody to help you, but again, they know all the rules. They know, like, for example, your farmer, most of you are probably farmers, okay? When do you have to have everything paid? The end of February. Okay, when are the accountants the most busy? In February. When do they want to do this 2-day audit? In February, when your guy's too busy to get a 2-day audit. And they can do to you whatever they want. And so then you have to appeal having it done in February because your guy can't do it in February. So then they're like, okay, you can do it the 15th and 16th of April when your guy goes on vacation. So you have to appeal that. So my guy had to redo his vacation. Then the IRS lady didn't show up that day.
Oh.
And they can do to you whatever. It's just
her 2 kids in Rapid got sick. She
supposedly.
She said, she called, said, well, my kids are sick from school, I can't make it.
So, she
The
made,
accountant wasn't very happy.
made him rearrange his
Yeah.
vacation and then she didn't show up.
Didn't show up.
And it's just,
Anyway,
I'm
let
gonna
him
tell
go.
you this, you save every receipt. And I go through, still use Quicken.
Frickin'
I have all my receipts in
QuickBooks.
ABC order and you audit yourself every year. Cause you think, well, I didn't throw any receipts away, so I got them all. Well, no, you lose them.
I would generally say that, in accounting terminology, they have what's called a chart of accounts. Chart of accounts is the back here on this income statement. You could use these right here. You could go down here and then that's your chart of accounts. What I like using are the lines right off the schedule. If you file a Schedule C, I like using those right off that field. It's like, okay, I think the first one is for farms, it's like, I think it's alphabetical, so it's like, ag chemicals or something like that, whatever.
Well, the thing you have to remember though is now you have to be set up for the IRS, you have to be set up for the crop insurance people. So just because the IRS says, okay, you have all green income. Well, the crop insurance people, you have to have your corn, all that separate. So when I put in there, I separate all of the greens, but like you say, when the IRS, we give it to your accountant, he
You
throws it all
can,
together.
you can kill yourself. Or you can pay a lot of money to the accountant. And you can have everything broke down. It's like I used to break down. It's like, okay, well, it's fuel, right? Well, it's dyed fuel and it's fuel that I pay taxes on. It's
Road
unleaded,
tax.
and it's all this kind of stuff. I can break this down, or the same way with seeds. It's like, well, it's corn seed, it's alfalfa seed, and it's wheat seed, and it's, no, when it comes down to it, IRS wants to know seeds, right? Okay. That's what they need to know. If you are to the point here in your cash deal and your money part, you're thinking, well, I need outside assistance. I need outside finance to make this work, right? And we can even use this for your own investments. So let's say you put in $30,000 of your own money, you broke open the piggy bank, you put in $30,000, and you can say, well, okay, I expect that I'm gonna get a 4.4% return on that deal. So that would be just like an annual interest rate, and I'm gonna get that for the next 5 years. Otherwise, why the heck are you doing the business, right? That's the big part of that. But let's say we're going to the bank. And some of these questions will impact the rest of this spreadsheet program. Source of the loan, yeah. Newer existing loan, yeah. SBA guarantee. This program will figure out what the percentage of that the loan fees are on that, if there are some. What the first month is. Sometimes banks or lenders will give you 6 months of interest free or whatever. How much money we need for getting SBA guarantee, whatever. But then it tells me what this payment is going to be. Now, if any of you were astute about this, go back here to income statement. Tell me why. Tell me why I only have interest on an income statement. $102 a month.
That's
Let's start
like
that.
your checking account,
Because
that's interest income.
the principal is accounted for.
It's a balance sheet
Either
item.
equity or.
Yep. That's where these two kind of mix, right? We say never the two shall mix, right? Income statement versus a balance sheet. Yeah. So on the income statement, we take out just the interest on that loan. And I will go back here and say, here's the amortization schedule too. This is what this is gonna look like. We start out with 15,259 after we add the interest, and then each month, how it goes, right? That's the value of this program. I'm not trying to sell you on the value of that. The point is that an income statement will be, you can make money. Your income statement will show that you made money for the year. But what it didn't show you was 3 months during the winter when you didn't have any income at all, is that you had a real cash flow crunch. And that typically happens a lot of times in agricultural situations, is that if you have income 3 or 4 times a year or whatever, there are times when cash flow wise, you don't have, because now here's the principal in here too. That becomes a fixed cost, right? Becomes a fixed cost. Like ending balance, it's like, well, what's happening to my cash here? I made money, but here it says my ending balance, I'm in the hole $5,700. Where'd that $5,700 come from? Where did it come from? Like, people don't understand that if you're just like, oh, I put that on my credit card. You're paying 18 or 20% or 22%. Happens with a lot of small business. Banks don't like that, right? But if you do it after the fact, and it's like, well, you do it to make the business work. Well, the best thing to do is say, well, I want working capital. I anticipate that I'm going to be short for 4 months of the year, whatever. So I'm going to need some capital to help me get through the winter. Now, some people will say, well, I've included my own salary in here. I'm just not going to take salary and that'll cover it all. Well, that's good. That's a good solution, but sometimes that doesn't cover it all, right? And some would say, well, yeah, I still need to pay taxes. I still need to pay my employees. I still need to pay the power bill, the bank note, whatever. All those things. So those become very important. I think now, does everybody have those two worksheets in there? Was that something that we covered?
The packet.
In the packet, it was like those sheets that I held up, that sources and uses and the income statement.
That's not printed off, but it was in the email, linked in the Google Drive, if anyone wants me to re-email it.
Okay. Those are a little bit more involved. But now you have to think, does your business plan answer those questions? In other words, does it say, I need a building, I need land, I need a high tunnel, I need a tractor, I need a delivery van, I need these things, and this is what it's going to cost me. And where's that money coming from? I broke open my piggy bank. I was a great spend or saver, right? Or I went to the bank. Banks want two things. This is just a little heads up for you. Banks want two things, and I can give them usually one. Two things they want collateral. Typically, if you go into a bank and say, well, I have need for $100,000, right? Okay, we'll give you $100,000 loan. Do you have $20,000 that you're going to put up for this project? Right? 20% typically is pretty standard, sometimes down as low as 10%, sometimes as high as 30%, and sometimes not at all, right? That's why we have other things that we can do here. If we go back here and we say, okay, we have a $120,000 project and 20% of that, which is actually $24,000, you probably have to come up with $24,000 of equity, cash, or some other form of contribution to that project, right? For the bank to say, oh yeah, we'll give you $100,000 loan. Collateral varies by banker, by bank, by lender, whatever, by situation, the time of the year or whatever, what their portfolio looks like. If they have a whole bunch of restaurants and you come to them with a project for a concept or an application, I want to finance my restaurant. Oh, sorry, maybe it's a great project, but we're full of restaurants right now. We're not going to do any more restaurants. So maybe that's where they're at. Their collateral position will vary upon all sorts of things, right? And I can't foresee what that collateral requirement is going to be, right? So I typically say, well, this is what this looks like. We go back to the sources and uses guide. You can see up here, this calculates how much how much equity or money we're going to calculate. It's like if it's 18.3% or whatever, or 6.2. Those are the ones that we kind of need to make happen. And when you fill out the sources and uses guide, again, business plan will tell the story why. And it's like, where is this money coming from? It's like, oh yeah, grandpa died and left me $60,000 and, you know, $30,000 of it's going to the kitchen remodel and $20,000 is going to this project or whatever. Okay. Yeah, this is erroneous here because we didn't have anything else in here, right? Okay, so the bank will want to know what you're bringing to the table for collateral. I am the one then that I am responsible for, and this is what the banks usually like to say, and they get in real trouble. There's been court cases about this. And they've lost, right? They came out and you said you wanted to get a loan from me. I said, okay, well, it looks like your financials are good and your credit report is good and all this kind of stuff. And you're contributing 25% to the project here. It's like, well, can you pay that back? Well, I'm not sure. And it's like, so you have some young enterprising bank loan officer that says, oh, I'll do your cash flow. I'll do your income statement for you. So they do cash flow. It's like, okay, well, what do you think this is going to be? And depending on how active they are with that. What happened with banks is that banks came out and they said, somebody took them to court on this. They said, we failed. We did exactly what you told us to do. And we still failed. And because of that, you're responsible for it as well, too. Well, the banks did that just a couple of times, right? So they like to have third parties like me, right? And or you saying, like, well, bring this income statement in, bring this cash flow statement in. And I can do that. I have the product that will help you put that all together. Now, that doesn't mean that's not going to be your numbers. It's like you say, well, yeah, I can sell $130,000 worth of tomatoes. It's like, well, okay. Tell me how you're going to sell $130,000 worth of tomatoes. Okay, you're going to sell it to every restaurant and farmers market and the grocery stores and every tomato that's eaten. And here, South Dakota is going to be from your garden. Yeah, that's probably not realistic. So I will probably raise the BS flag and say, let's look at these numbers. Now, so back to your business plan. This right here. These are numbers that I put together, right or wrong. I handed these out this morning. This is all publicly available information. It takes a lot to go through it, and it takes a lot even longer if you don't know what you're doing, right? This is available from Department of Revenue, so every time you pay your sales tax, it's added in here and it's all combined, right? They will do it by month, and they do it in this particular case by fiscal year. They do it per town, right? So whether you live in Letcher, South Dakota, Oneida, Sioux Falls, they're all broken down, and they're broken down by SIC codes. SIC, Standard Industry Classification. You ever heard of a NAICS code, NAICS? Kind of similar. SIC codes are 4-digit codes, and there are a bunch of examples on the back side there. I put in there for put grapes, like, you know, guess what? Grapes are usually not sold They're not produced and sold at a retail level where we pay sales tax at them in South Dakota. They're sold wholesale, right? Maybe. Vineyard sells them to the winery or they make their own wine out of it, right? They pay excise tax, whatever. Next one, wine, brandy, and brandy spirits. Those we do pay sales tax on, right? So if you can get the accurate information, we talked about that a little bit before, you can get the accurate information, those are good things to put in there. Now, I didn't include those two, but I did include, some of these up on the front, you can see the SIC code. I did this for somebody who was investigating a restaurant. So I thought, well, okay, what are restaurants doing in Lemon, South Dakota? And what have they been doing for the last 6 or 7 years, right? What did they do through COVID? Did they stay in line with what was happening in the rest of the state? I guess I could break that down. It's like what happens in the neighboring community, right? I looked at drinking places too, so bars.
Everybody went thirsty for 2022.
Well, and you think about what happened in 2020, 2021. What happened? Did people go to bars? No,
And
they
they
didn't.
did in South Dakota.
They might have been South Dakota, but but bars took a hit in 2021, 2022. But then they came back, oh yeah, everybody's going to the bar now, right? And sometimes it made up for it, sometimes it didn't, right? In Lemon, boy, it's not looking real good for bars in Lemon. We're still at, in 2023, fiscal 2023, which ended in June 30th. They're still below the level of 2019 and 2020. So does that mean a bar closed? Did that mean we shifted a culture? Did people stop drinking? Did people stop drinking at the bars? Yeah, well, maybe that was it. You know, we can, the big thing here is that we can make these numbers say a lot of things in our business plan. You know, I will encourage you to talk to somebody that talk to me, talk to one of my colleagues, maybe they'll do this for, go ahead.
Is it, so this is available on the Department of Revenue site? You can
Yes.
get this resource.
Yes,
Pretty cool.
absolutely. But I will tell you that these numbers right here, they come from about 120 page document. Every SIC code for every town, page after page after page, and it's a lot to find them. And then I do the yearly, and then I do the percentage change, right? So, which is on a spreadsheet, it's pretty easy, but anyway, I encourage you to to include in those, include your business plan, these numbers or numbers similar to this, right? Maybe they don't need to be that, you know, maybe you don't need to have hotels and motels, but is part of your business is relying upon how many people stay there? Is this tourism traffic, right? Okay. Yeah, hotels and motels. Yeah, they took a big hit. Well, they took a hit in 2020, 12% down. Across the state, we took a 7% hit. That was a pretty big deal, 7%.
Did they separate like the vacation rental by owners, or those just put in with the hotels and stuff?
Usually you can look at the descriptions down here. Sometimes they will tell you what they include and what they don't. So hotels, motel, commercial establishments known to the public as hotels, motor hotels, tourist coats, primarily providing lodging or lodging and meals for the general public. So does that include your VRBO? Does that include whatever? So, but you can search SIC codes. You can say, well, okay, vacation rental, right? Just go on the internet and search vacation rental, and that'll, you know, it might bring up 7011. Okay, that's where I'm at, right? That's as much as we're gonna do. In Lemon, South Dakota, I also figured that how the farm and ranch economy was doing is a function of multiple things, right? Function of markets, function of weather. How good I feel about this year, how much it rained, how much it didn't rain, how much snow we got. If we just had a blizzard and killed all my calves, all sorts of things. You can see that this wildly fluctuated, both in Lemon and the state. You know, we're talking millions, or let's say in 2023, we had $6 billion worth of sales in that farm supplies category, which covers everything probably from riding lawnmowers to tractors and irrigating equipment, right, whatever. But in Lemon, went up 158%, then dropped 87% 2 years later. Now, if you're a business, you can lend in your business plan credence to any of those numbers. And you can kind of make them say, well, yeah, because of this, here's what I expect my business is going to do. Right? So eating places, yeah, in Lemon, we were down 15%. Oh, okay, but maybe we'll explain that. We'll explain that 15% decline was primarily due to Aunt Mabel shutting down her trusted cafe. Everybody stopped going there. It's like, oh, we haven't found the replacement, right? Or you might say, despite the 15% decrease, here's what we think we're going to do. Here's how we're going to remarket. We're going to start talking to younger people. We're going to start talking to the fishermen at Lemon that are at what's the lake there? Keyhole? Shade Hill. I'm sorry. So you can make it say that, but explain how that's going to impact your business, right? Is it accurate? You will know in a year, maybe 2 years, you will know whether your assumptions were accurate, right? One of the things I put on here, and I put back here in the back, I put fruit and vegetable markets. That's another one. May not be there. Fresh fruits and vegetables. Florist. So what are the flower people saying? You can look up any of those and see kind of what they were, what the trends were. I also, if any of you were students of economics back in college or maybe even in high school, complementary products, right? Or substitute products. Substitute product used to be, it was butter or margarine, right? Butter or margarine. You either bought butter. If butter got too high, you bought margarine, right? Tennis shoes. That's a brand. You either buy Nike or you buy Adidas, or now you buy Converse, right? So which one, if we could look at all the figures, and I'm sure they're probably available, probably somewhere. It's like, oh, how are these companies doing? You buy one or the other. Complementary products are things like, okay, socks and shoes, right? Now, I don't know if they are or not. You buy a new pair of shoes, you buy a new pair of socks. So
Shoe polish.
shoe polish, maybe that's a good, I don't, who polishes their shoes?
I sell boots.
I do.
Boys. That's what I'm thinking.
I polish my shoes all the time. You wouldn't tell us today. But those complementary, dogs, dog collars, dog food, restaurants, bars, are they complementary? It's like, well, do I go to one or do I go to the other? If I spend money at the farmer's market, do I spend money at the restaurant? Is that not a substitute product. Or it's like, I buy one, but I don't buy the other, right? I buy gas, but I don't buy diesel, because now I have them. Or vice versa. I don't buy gas, but I buy diesel. Because now I switched from my gas pickup to my diesel pickup. Okay. So, all those things you want to include in your business plan.
I want you to now. We have 20 minutes left. I'm sorry, but I didn't give you time to fill out this sheet.
I think these explanations are appropriate for the work that you have to do as you go forward here. Knowing why that business plan says what it does, or what things are you going to include in there. Like I said, many times when I see business plans, when I see people writing business plans, I see relatively fluffy type descriptions, right? Like, I'm going to do tomatoes because this is a great thing, and I'm not sorry to pick on tomatoes, right?
You kind of been picking on them all day, so. You want to raise Jerusalem artichoke.
I want to, okay, yeah, I want to raise Jerusalem.
World-changing protein and
Yeah.
reduce carbon footprint and.
Yeah, all those
Well,
good
save the
things,
pink
right?
one.
It's like, well, yeah, but, show me the proof of that, show me, it's like, well, how much carbon do they actually save? Where's the market for it? It's like, I think we had this conversation before. It's like, well, we can raise this stuff. And I think that's what a lot of people, we can raise this stuff, but what if we outdo the market? Right? And now, especially with a perishable crop, what if we have way too much of this stuff, right? Strawberries, tomatoes, Jerusalem artichokes, beef, whatever, if we have way too much of this stuff, maybe we have saturated the market or our market. So then, you might include in your business plan when market saturation happens at year 1 or year 2, then we're going to expand to another municipality. Or that's when I think we can start going to Facebook or social media, right? Or we can rely then on our rely on our website, whatever it might be. Those are the types of things that we're going to put in there, and we say, and then try to add the definitives, the things that are objective to the reader. It's like, oh yeah, Jerusalem artichokes are the best thing, since it's like, well, maybe I'm not really sold on that. You tell me why I should be raising Jerusalem artichokes, and tell me what kind of a market. Like maybe there is a great market for Jerusalem artichokes, but maybe it's only $15,000 a year.
That, there was something with those artichokes that happened by change. I don't know. It's back in like the 70s. Remember that?
Yeah.
You joke about it, but seriously,
No,
there were
that's-
farmers that got taken in on that.
Yeah, that's what I'm alluding. to.
Ostrich.
Yeah, I think that's where he's going. And my FFA advisor went around to all of us alumni, for all of his years of alumni, and went into our yards and warned us off of
Jerusalem
the clown that
Okay.
was doing that.
Yeah.
And
I
a lot of them got took.
Well,
Tens of thousands.
And I think, I'm trying to keep you from doing that same thing.
Right.
Like, a lot of people say it's like, we are here, Small Business Development Center counselors are here to make you, or to give you a better chance to have a successful business, right? So you write a business plan, you tell me what you think this is, why you think this is going to work, or how this is going to work. And I say, okay, well, you didn't include your own wages here, or you forgot rent, or maybe you're an ongoing business. Do you have separate checking accounts for your LLCs, right? Everybody's like, what do you mean, separate checking accounts? It's like, yeah, they're two separate entities, so you want to keep them separate. And especially if you ever get sued, or somebody claims that, because sometimes it doesn't even get to that court deal. They will say, well, this was acting, you were buying groceries out of your business account. Well, what did the business need groceries for, right? You're a power washing business, right? Okay. They would say then, a good lawyer would say, or an insurance company would say, this business was operating side by side with this business. That LLC partition that we had right in the middle, that's really weakened, or there's a big door here, and we're gonna go through it. And we're gonna take all your assets. So keep that in mind. If you have a separate account, keep a separate business liability policy, keep separate, they own all the assets here. They have the property and casualty business. This entity over here has renter's insurance and has a business liability policy. This business here also has business liability because, yeah, maybe I was supposed to have cleaned off the snow every morning if we got 2 inches over. It's like, well, I didn't do it this week, right? Because my dog died, right? So doesn't make any difference from, to a court or maybe to an insurance company. They'll say, how's the jury going to react to this one? Yep, we're going to pay you. Oh, there goes $60,000. Here, we'll write you a check. Might not have been the 360,000 you were looking for, but here's 60,000. You can say, yeah, okay, I'll take 60,000, and off you go, right? So, questions, concerns? We've covered a lot of stuff. Go ahead.
What were the two things the bank needed? They wanted collateral.
Collateral and ability to repay.
Ability to repay. And that's demonstrated by your business.
By income statements, cash flows, balance sheets, the financial statements, the financial package that I or my colleagues could put together. Or you could as well too, if you want to go through all that. So it's a lot. And when I do these, it's like generally, it's like somebody will say, well, because I'll do them, and I'll do a really rough graph based on maybe a 2 or 3 hour conversation. I could probably do a rough draft financials package for every one of you in here, right? Like I can just pull numbers out of here and like there, and okay, this is what this is going to be, and I can probably do that. What I want you to do is go through there with a fine tooth comb and say, well, where'd you get this number? Or that doesn't sound right. Or yeah, that's really close to what we talked about. So I get that, right? From that perspective, then, yeah, I want you to take a look at those numbers. And then I want it to go back and forth. Now, some of the other counselors don't do it that way. Some will say, we'll get you come into the office, or we'll talk on the phone and say, well, what's this one look like, or whatever. They'll give you 1 or 2 pages. And I have found out after a while, it's like I send out maybe 2 or 3 pages, and then I send out 5 or 6 pages, and each time there's some more edits there. In the same way with business plans, it's like, well, maybe you need to strengthen this part. Why do you think Jerusalem artichokes would sell really well, right? Okay, maybe there is. It's like, yeah, but now I'm going to have to divide that market in half with the guy that's already producing Jerusalem artichokes. He's been doing it for 30 years. So I'm going to have to earn 50% market share. And the lender will go like, maybe not. right? If you're selling tomatoes, if you're saying, well, the market, based on what we have here, like, there are numbers here, I will tell you that there are numbers that restaurants spend for produce. Right, so if I'm wholesaling tomatoes, it's like, well, is that their big thing? I can find those numbers. Sometimes I might have to dig for them, usually. Usually pretty hard, through different trade publications, through things, and it's like 8% of their food cost is tomatoes, right? Oh, okay. 8% of $2,347,000 is $16,000 of tomatoes, okay? Well, can I beat Cisco and the other off the truck people by providing tomatoes for 6 months? I get half of that. Like, what if I don't do that 1 week? You think that chef is gonna say, oh yeah, I'll water on the bridge. I didn't have tomatoes. I had to go a busy night and buy tomatoes down at the grocery store, and they were rotten. They were terrible, right? And I paid $3. So everything that I gained by buying from you, even though I really like those fresh garden tomatoes, that local pork, that, you know, beef or whatever, I really like that, but guess what? It's just so much easier for me to goes up on the Cisco truck and they drop it off on a stack, and there we go, right? You have to sell yourself. It comes back to promotion, that part of that 4 Ps, right? Product, price, placement, form of promotion, right? You have to sell yourself. Every time you go there, you're not just a delivery truck driver. You're saying, well, gee, look at these tomatoes. Look at how great those are. Man, it's the tomatoes. Smell the tomatoes, all right? I don't know if you can do an accent. Hopefully better than my fake Italian accent. But you sell to them every time you go there, right? Look at these pork chops. They are so great, and you can't wait until you taste. I had some of these last night, and I did them this way or whatever. And it's like, oh, really? Yeah, it's okay. Yeah, we have, and make them believe in your product, right? So that's back to that product stuff. Okay, we're at 3:20, right? Wow. And you didn't even get to do some of this stuff, right? Questions. We've been doing questions off and on. Is everybody ready to get out of here?
If we get one of these put together, can we email it to you?
Absolutely. Absolutely. That's why I gave you all my cards. You all have my email addresses. You can go to your individual SBDC people. But since we had the conversation here, and sometimes it's like, if you're gonna do a complete business proposal and you're gonna look for financing and all this kind of stuff, I might send you back to my colleagues and counterparts across the state.
So I guess I'm sitting here listening to the planning, and it sounds like, it sounds like I have vertically integrated enterprises, and I need separate business plans for each of them. And now I'm sad.
Yeah.
Well, you could,
You don't need to make
but
money
I
on all of them.
agree. I will tell you, it's not like a lot of other agricultural enterprises. Well, our cows made us all the money. We don't sell our hay. We just raise it for our cows. Okay, well, what's that hay worth,
Yeah.
right?
Okay.
So if you're not, you say, well, I can sell, it's not that easy. I can sell all my hay because it's really valuable this year. And the cows would eat what, right? Well, maybe I had a lot of hay too, right? Maybe this year was a good example of it. Or maybe I could sell them, or I could put them in the dry lot, and let somebody else do it, right? Okay, let them buy the hay, right? They already have a bunch of hay. And maybe that's the case. Usually that's not the way it works with
Farming.
the farming businesses, right? But there, I don't know how many times people said, it's like, yeah, we don't sell oats. I said, so that was one of the things that we looked at. We said, you know, how much it cost you to raise a bushel of oats? And most of them, it was like $2.50 a bushel. This was 25 years ago.
Okay.
And it's like, oats. Yeah, we just do it to plant alfalfa. I'd take them out there and show us like, well, okay. This is not a good deal either, right? But they would say, oh yeah, we just raise oats. Go buy the oats, right? Go buy the, you know, whatever it is you think the oats is doing for you, whether it's you feed it to your horses or roll it for the cows or whatever. What's that, you know, but get them or show yourself why this makes sense, right? Or doesn't make sense. Does it make sense for you to raise your own tomatoes? Or could you go buy tomatoes off the back of the truck and say, or go buy them from the Hutterite colony or from the farmer's market?
Or market, Paquano.
Yeah,
yeah,
that's what I
the
want. It's like I can get all the tomatoes I want. Tomatoes are really plentiful, and then I can take them up to Michelle, and I don't have to have any of the processing equipment. I can make all the salsa I want, helps Michelle out, helps you guys out, and I can, instead of, you know, the selling price is $10 for a quart. But guess what? Instead of making $3 a quart, I made $5 a quart now. So what makes the most sense?
You know, we even had a guy out by Chamberlain, I don't know if he still does it, but, you know, he ran a hunting lodge business. Okay, well, he leased all the land, they just went leased one hotel, you know, for the whole hunt season. And I don't know, he must have hired a caterer or someone to bring it. I thought, man, who thinks that you can run a hunting lodge when you don't own the lodge, you don't own land, you don't, you know, and he did it, and it's.
Remember what I told you earlier about fixed costs versus variable costs? Very low fixed cost, right?
Yeah, 'cause
But
he
really high variable cost. He probably had it planned out, so he was making $100 every person there, right?
Well, when you do a lodge, you get a lot better. That's.
But who
the way-
made the money? Did the lodge make the money? Did the people that were renting the land, did they make the money? Oh, well,
Everybody probably made something.
everybody probably made something, and there's probably,
But they get their ROI.
hopefully. It's like, if you're selling hunting rights out to hunters, what's that worth? That worth $2 an acre?
It all depends on what you're hunting and where's it at,
Yeah.
what's the gain?
Call the auctioneer,
Call the auctioneer, and it's like,
auction it off.
auction off, yeah, it's like most people don't wanna sell their land, right?
Well, just, so auction the hunting. Like,
Well, they
The
auction
hunting
grants,
rights, right? And it's
They
like,
auction.
do I, and what do those hunting rights include? Is that exclusive hunting rights, so just your hunters can come there? Or, no, I brought my family there last weekend, so we hunted all that out. Like, yeah, you don't even need to go into that CRP deal, right? Like, probably the last time you'll rent it out.
This is kind of putting you on the spot, but like, you've looked at this, like in general, for how long? I mean, is there kind of certain industries that kind of make it and some that kind of don't? I mean, they're actually profitable, you know?
I will say that, you know, there are some things that I think look like they're pretty, I think trucking is really good right now. You wanna buy a truck and start trucking, it's like, I think you can make money, right? Restaurants, I would say generally are a low profit situation. 2-3%, they have a high failure rate. People say, well, I'm gonna open a restaurant because everybody tells me I'm such a great cook. Well, it's not about being a great cook, it's about managing people and customers' expectations and prices and inventory and all sorts of other things. Restaurants are tough, right?
But I just meant like some of this more egg related, like,
Ag related.
you know, I'm just talking, okay, is like grass-fed beef a good generally, or,
You tell me.
well.
You tell me that in
it's-
your business plan and you say, here's how I'm gonna market this. I'm gonna sell 300 critters a year, grass fed, to all these customers that I have. Because I'm hooked into whatever, right? That's maybe great. Maybe you can make money. But now you also say, well, I'm gonna build my own processing plant for $2.2 million. Ooh, cheap. Okay.
Well, you know, and like Christine Christensen, she sold Hamilton or whatever, you know, she sold land and then cause she had so much land that she took that money and went and bought a $10 million, but she's beyond anybody here,
Right,
most anyway, probably here.
Right,
You know,
but in
you know.
the same token, it's like, for people that are doing businesses, like they want to do a business here in Pierre. I say, okay, what are you paying per square foot for that business? What's the market rate? Could you go out and build it yourself? I don't know, interest rates are going back up. A lot of people are really reluctant to build or buy anything right now, especially maybe here in Pierre. And you can look at things like commercial building permits. It's like, pretty flat here in Pierre. Actually have hit a peak and are going down a little bit in Sioux Falls. Rapid City, on the other hand, whoop, keeps on going up, commercial and residential, right? You tell me, when's that bubble gonna burst? I can say a bubble. When's that market going to?
I mean, we've had 2 houses in Chamberlain sell for over 700,000 in Chamberlain.
Must be a hot market, right?
And one of them's a local person. I was like, oh my word, how did that person, works at St. Joannian School, you're just like, holy moly.
Couple
Yes.
of minutes, could you possibly talk about nonprofit matching and income, like how to justify, because they're asking how much can you match for this million or for this 100,000? And I don't know that ratio to like land versus expertise versus this volunteer comes in, and if they're willing to come in, what is that worth? Is there some, I need to.
Okay, well, I'll explain a little bit to you about, first of all, about nonprofits. Since I am partially paid for by, or completely paid for by tax dollars, nonprofits don't generally pay income taxes. So that takes SBA out of it, right? If it gets to be kind of a gray area, things like cannabis, legal here in South Dakota, my boss said, stay away from it, right? Nonprofits are the other one. For the most part, we're told nonprofits we can't deal with, right? But some of the same concepts still apply. If you're talking about matching funds for, let's say, a grant application, and you have land to pledge to this, if you can pledge that, okay, that's your contribution. I think that grants are a little bit different because a lot of times they don't follow the same rules that a lender does, right? So they might say, well, we'll go along with you as long as you do this or do that, right? Generally, I would say, and it's not done a lot, many times grants are, it's like, what's sustainable? What's going to be here in 3 years? What's going to be here in 5 years? And that sustainability element to me is absolutely critical. Are we shifting the culture for our residents, for ourselves? In other words, are we growing and processing our own tomatoes right here, or are we just buying them at the grocery store? Like, they came from Mexico and, same way with meat. We talked about meat here a number of cases. 3 years ago, when COVID came and you couldn't buy meat on the grocery store shelves, that local producer became pretty important, right? Or the people that had meat in their freezer.
The processor.
Yeah,
And the
but the
process.
negative part was getting the meat into the processor.
Yeah.
Because there was not enough processors.
But when Smithfield closed down in Sioux Falls, you could buy pigs from a lot of those guys.
Well, and that's why the processors were jammed.
You're right, all the little
You
processors.
get really high quality compost too.
Yeah, yeah. You can buy a pig for $50. Oh, yeah, I'll keep you in pork for a while.
But how sustainable is selling a pig for $50? I mean, okay.
It's not, but it's better than,
Yeah, well, they didn't have anywhere to go.
Yeah, that pig, when that pig's ready, that pig is.
Yeah.
thing is ready, right? When your tomato is right, what do, right?
So I follow up with John, are you talking about how does a nonprofit support for your enterprise? Or are
Right.
you talking about dealing as an entity?
Well, no, with, land and, what is that worth? What the way,
Oh, okay.
I'm just learning about that stuff right now.
Did I answer your question, John? I don't know.
Well, just different scenarios, you just talked different scenarios and
Right.
it's gotta be sustainable.
It's got, and to me, that's a key consideration, but for some people and some grant reviewers, it may not be. It's like, we'll give you the money because we like the project, right? We don't care if you're, it's like, but whenever I've done grants, I've reviewed a lot of grants, I've written some grants, I've administered grant programs and all this, and one of the things key to me is like, are you gonna be here in 3 years from now? Or are you gonna say, well, this was a nice experiment, right? And now it's like, where are you? We've seen that after 1 year, 2 years, like, didn't even come back for the rest of the money. They got the first part of the money and then they did a few things, or maybe they didn't even do that, and then they left, right? It's like, woo, wow, that was. Do we hire an attorney to go look for them, right? No.
Yeah.
But some grants say, we'll give you $250,000, and a fourth of it's gonna be matching. Well, I mean, you gotta come up with that, it doesn't have to be dollars, it can be, but
And sometimes you can ask too, is that matching, is that in kind?
that's what I mean. That's what I mean. What
Is
is
that
it worth?
sweat equity,
I don't know.
what, can, we have 14 volunteers working on this and they're going to put in our time, they're gonna each put in 17 hours or whatever. We can, and their time is worth $20 an hour, right? So we calculate that out, so much per hour. Yeah, okay, here's our match for this, if they allow that in-kind contribution. If they say, well, it's dollars, it's like, usually it's a non-federal source dollar that you have to match with it. So you can't take, okay, we got this grant here, we're gonna apply for this grant, and this grant here is gonna be our matching. No, usually they don't allow that. Sometimes they may allow state funds or it will go to a bank, get a loan, right? Okay. The bank, well, you need, it's a $200,000 project. You need $20,000 from the bank, and of that you need $2,000, let's say, of your own money, right? Or, whatever's in your account. Oh, that works, right? We can look at all those different scenarios. Generally, again, with a nonprofit, that's tougher. And we have that question a lot of times with nonprofits. It really gets gray area. It's like, okay, one of the things I'll tell everybody is like, okay, you're gonna do this. And it's okay, well, we really want the operating entity to be a nonprofit, right? Okay, well, the holding company, the place that owns the building and the land, they can be for profit. Ooh. Well, how do we know that the operating company is gonna make money? Until we do the financial analysis, right? So how do we know that they can pay this holding company or the people that, make their rent payment, people I'm making the rent payments to, how do I know that I can make that payment if I don't do some work here? That gets to be pretty dicey. That's usually I do that quietly. And I've run into that very instance, right? So is the company that owns this, yeah, are they for profit? Yep. I think I could probably defend that. This entity here, is it nonprofit? They're not paying income tax and have some other rules. And they got grant funding, they got all this kind of stuff. And by the way, you don't, in most cases, you don't need to be a nonprofit to get a grant. A lot of times that's the way grants are set up. We only give it to nonprofits, right? Some are wide open. NRCS program, they give it to almost anybody. For-profit, nonprofit, individuals, corporations, partnerships, municipalities, government agencies, just about everybody. It's like, you want money? Here you go, right? So talk to your NRCS. Don't say I said that.
Perfect word knowledge.
Yeah.
A couple out of, when you were in Rapid City, presentation over there, there's a couple in the back group from Murdo, or,
Yeah, Pagan
yeah.
and
He said, I went out there and visited their place, it's an awesome place.
awesome place.
Yeah, and he said, you guys were talking here about having that. You're gonna bring in, 1,000 pounds of, yeah, whatever you want, like say potatoes, whatever. So one time he brought them there and, some guy just came in and he goes, oh, well, take them. Cause I can't use them. So he just, our charity or whatever.
Charity, right?
Yeah. that's
Well,
what he said,
and
charity.
I will tell
Instead of getting
you that
mad, he just said charity.
occasionally, since this is part of my job too, occasionally the federal government puts out solicitations for food. Like for places like Ellsworth, you're looking at the commissary. You're selling tomatoes or tomato sauce to the commissary at Ellsworth. They have a deal. It's like we have to buy so much every year. That's done, usually typically done by contracts. It's a process, but you could do that if you think, it's like, don't show up with, I got 8 jars of tomatoes here. It's like, give me 50 jars a week or whatever it is. Sometimes the Indian schools, the schools are other ones that buy product from smaller producers. Feeding South Dakota, we've been there. Feeding South Dakota is taking excess production and distributing it through the various channels that they distribute through. Turkey.
Lantos Farmers Market has a grant right now to buy extra meat and produce from area growers,
Sure.
and then they redistribute it to shelters and
Yeah.
places that have.
A lot of,
right now.
And that's a great thing, is like, oh, we have all this stuff, we can throw it away, or we can give it to somebody that really needs it, right?
Yeah, and they're paying regular price for it too. They're not like trying to
Right,
get a discount.
right. So there's, and is that part of your marketing plan, right? Is 10% of my produce, does it go to this program here?
Just know how long the program is gonna last.
Yeah, and it's like, do I have that in a 3-year projection? Yeah, maybe,
Yeah.
maybe 2, well, yeah, maybe 2 years, but maybe the first year is all I need it for, because that's what I need I need a little bit of a safety net. If it goes on for 2 or 3 years or 10 years, oh. Found out a lot of government programs, once they start, they don't stop. You know, that's not always the case, but it can be. We didn't talk a lot about meat. There's a lot of grants and or loans out there for meat processing. MPEP, meat processing, whatever. They came out with a bunch of millions of dollars and handed it out a year or so ago. The second round of that, I think, might have already closed, but it was grants for meat processing. But there are loans at fairly good deals being offered through usually community development corporations. So First District, Third District, West River, those people are offering, and it's up to them, right? 3-4% though, that's pretty good though. And
Gotta get people to work,
Yeah.
The lockers in Chamberlain are just screaming for help.
and that's the big one,
Kimball was gonna try and get just a community locker for a group of investors. They worked pretty hard at it, thought they about had it done, and I don't know if some of this money may have been part of it. But ended up with really too many chiefs and not enough that who's gonna manage. Well, no, my cattle are coming in here first, and then the next guy is, it all fell apart because of the group effort. This wasn't gonna fly.
Meat processing, I've seen projects, greenfield, that started with absolutely nothing, just bare as the floor here, right? They had a meat processing, this is custom, you have to understand the terminology, a custom, they can process, you bring in cattle to me, you bring in cattle, and you can bring in cattle to me. You can take it home for yourself. You can sell a half to your neighbor. You can sell the whole thing to your neighbor. There's a little bit of, they look over a few things, but it's supposed to be, it's like not for sale. So if you ever see anything that's not for sale, so a custom plant, they build it for $750,000, right? I have seen other ones that are saying, well, okay, and this is where you want to stand back and look at this. You want to say, okay, how much is it costing me to process an animal, right? And does that make sense, right? And like back to square footage numbers, like how much can I pay? A $15 million project, 20 times more. So are they going to be able to process 20 times more animals? The one that I said was 750,000, they process 7 or 8 a week, right? The $15 million one, are they going to process 20 times? Are they going to process 140 a week?
How many million did you say?
15 million.
You could almost do that.
Maybe,
So
yeah.
$750 plant.
750,000.
Only processes,
Brand new, everything brand new.
and how many animals a week?
I think like 7,
One a day,
1 a day. Oh, well, you don't work on weekends, clean up or
I suppose.
maintain equipment or whatever, but
But
probably have a rotating kill schedule too, so you're not.
Yeah,
killing
you probably
every day.
kill 4 one day and 3 the
Right.
next day, and then the
That's
rest of the week you cut up, right?
You gotta switch your work.
I just can't believe it costs that much to process.
It's pretty expensive.
Yeah. And so then you say, okay, how much per animal? How much per pound of tomatoes? How much per, whatever, how much per grape? I will tell you, grapes are, I'll show you some figures on grapes. Wine isn't too bad. Grapes are like, ooh. You're competing against people out in California that are growing for 50 cents a pound and have a hard time getting.
Oh, yeah.
Is that right?
Yeah. But
Trees are high in Chamberlain.
so you say, well, it's gonna cost me $700 per animal to process this. Okay, I can make money at $700.
Try,
So
try 12.
12, yeah, 12. I think you can do it cheaper than that. I think you can do them for 800, but that doesn't mean, it's like, show me that. If you think it's be 12, show me that. It's like, if I'm a banker, then show me that. It's like, why do I think? Well, because I have to have this equipment because I can't hire somebody to stand here and cut bacon all day, right? Or, so I'm gonna buy a $60,000 machine that slices and packages and everything, all the bacon for me.
But then we're also gonna show the banker, this is how we're gonna pay for that bacon slicer.
Yeah, and that's exactly what it is. Whether it's just a one-off item, it's a bacon slicer, a roll, what they call roll pack machines.
Oh,
A roll pack machine. Okay, well, that
Cryo
makes
vac.
sense. Dakota Butcher. Who knows Dakota Butcher here in town, right? Here in town, Watertown, Rapid City. 2 in Watertown, actually, but
And Clark where they started, right?
Clark where they started, right? Yeah, so, and they sell a lot of pepper sticks. I'm guessing this time of the year, they sell just a huge amount of pepper sticks, but they sell steaks and roast and frozen stuff and Hutterite stuff and
They know how much they're.
ready to eat food and buns, right?
Daily barbecue.
What?
Bison, daily barbecue and rapid.
Daily barbecue, right?
Good bison.
Good bison, right? I wonder where they get their bison from.
Wyoming.
Wyoming, right?
For a wild idea, don't think it's
They
wild.
sell ice cream and they sell meat and sweet.
I don't know, I just know they're good bison. Place I used to work
Sweets.
for.
I thought, boy, that covers meat, ice cream and steak.
But is it consistent with your brand, right? Dakota Butcher, I mean, I walk in those stores and it's like, they sell almost everything that you can eat, right? They sell the steaks, the frozen stuff, the stuff you're gonna take home and put on the grill tonight. They sell lamb, they sell fat if you're gonna make your own sausage. They sell
Tater tot casserole.
tater tot casserole, they sell cheese.